What's going on, guys? Good morning, everybody. Welcome back to another live stream here with the Everyday Growth Advisors. Hope you are having a good morning, day slash everything. What? We had CPI numbers just come out about 45 minutes ago, and it was pretty much mute. It was neither good, neither bad. Markets kind of dumping a little bit as a reaction, but nothing really crazy, honestly, this morning. If anything, I do expect for us to rally a little bit and then end the day off with another sell-off. That's what I'm just in a nutshell expecting. But let's get through the technicals here and also see if there's anything on the macro side that has changed. On the macro side, we have the dollar index still roaring up here. If we get up to 114, again, that's going to be more pain for equities. The SPX did move lower further down without the dollar there, which was sometime in September 27 or 28. So therefore, if the dollar index starts rallying again, that could be more pain for equities to the downside. Hand in hand with that, you have TLT, or the bond market, aggregate off the bond market, rather the fat tail of the bond market, still selling off here, broken through a key support level at 101. Kind of should be going for the next round here, which is going to be first 96, and then if we can bounce at 96, 97, then we can go higher. If not, we're likely to come down into 93, and then after that the major support at 88. So that's what you got to be aware of on TLT. The bond market here is really going to support equity valuation as yields are starting to still completely obliterate and hit to the upside. Remember that when bond prices come down, that means yields go up. And so if you're looking at the US 10-year yield, then, you know, more pain ahead. So 10-year yield currently sitting at 3.96. As of this AM, still pushing up. And if we do break, then it's going to be, you know, a little more pain here up into the 4.2 level, 4.2%. And remember, as the yields continue to climb, that's going to put more pressure on the equity sell-off. Adding on to the pressure is the CPI number for tomorrow. Now, here's why the CPI number for tomorrow actually doesn't really matter. Right now, we are in a market where good news is bad news and bad news is good news. And tomorrow, if let's say the CPI number comes out higher than expected, then this is going to continue the rhetoric that the Fed has to continue to increase interest rates at a higher pace, right? And if the interest rate, if the CPI number comes in softer than expected, then it also could signal that the economy is stronger, and also give us a notion that the Fed may continue to hold interest rates, or, you know, keep it at its current level. So right now, the only thing that can really save the valuation of the market is the Fed. And they need to be very clear about them backing off from their hawkish monetary policy and saying, oh, you know what, we're going to let the market breathe for a little bit. We're going to pause the rate hikes. That would give relief to equity structure. That would give relief to the bond markets. That would give relief to the yields. That would give relief to the dollar, because that would halt their bond buying program. Okay? So that's what you need to keep in the back of your head in terms of the macro perspective. Now, of course, having this war in Ukraine doesn't make things easier. It's only exacerbating the situation. And then you add on that the energy crisis that's going on, which, by the way, I intend to get in long energy somewhere, probably today or tomorrow, if we can get a nice bounce on XLE. Add in the energy crisis, and you have yourself a nice cocktail of very, very troublesome situations that the market's not really seeing any light at the end of the tunnel about. So from the macro perspective, nothing is really improving. And I've mentioned this before. Think of the stock market like a road that you're driving on. And when you're driving on this road, if you have a couple of traffic lights right? If one of them is red, the other is red, and one is green, if this one's green, the market's not going to move and rebound back. The market will only rebound back when all the signs are there that it's green, green, green. And so when good news piles on, it piles on all at one time, and when bad news piles on, the reverse happens. So we're seeing a immediate and counter emotional sell-off in the markets, mainly because everybody's pessimistic at the same time. Okay, and fear is really, really peaking right now, right? Does that mean that equity bottom is nearby? We don't know. Actually, there's a lot of people who are saying, oh, the stock market's showing signs of a bottom. I personally don't think so. I personally think that, it's impossible to tell where the bottom is, and it's pointless to try and guess. It's a fool's errand to do that. If you have ever learned anything about finance, you know never to try and guess where the market bottom is. It's just pointless. What you do instead is buy your equity in phases, in tranches, and if you're a day trader and you're trying to make some quick money through options, then you pick your pivot points based on where the risk to reward is the highest. So if you were to look at where we are right now, the risk to reward ratios, where are they favoring? Anyone want to answer that question for me in the chat? Where is the risk to reward ratio favoring right now in the short term? If we talk about just today, where's the RR favoring? I think the answer is pretty obvious. The RR is favoring the upside, right? We're sitting at a key pivot point. We've tried to break this pivot point a couple times. Now, it doesn't mean that we can't break below it, but if you're really looking for a trade, then the trade should be to the upside for the temporary point. I think that tomorrow's CPI numbers doesn't matter because I think the market's going to sell off tomorrow anyway. I think that the pain will continue and we will get down to 3,400. It's just a matter of when. So today we might get one of these snapback rallies, but maybe it won't be this exaggerated. I think that the squeeze agenda is not over yet. We've been seeing a lot of these squeezes, but like yesterday's squeeze wasn't as violent. Like we might get one of the yesterday's squeezes today again, or maybe it might be a bit more of a violent squeeze. But I'm thinking somewhere up to around yesterday's or the day before high, like 36.50. And if we really, really want to squeeze, then we could get up to 36.80 or even 3,700. That could be a possible. Those are three possible upside targets today. Now, if you want to take the bearish trade, this is the thing. The bearish trade risk to reward ratio is only going to be beneficial when you get the break below 35.70 on SPX, and then you hold below 35.70 and start rejecting it. Now, if we break through here and then start rejecting it, that's your nice risk to reward ratio to go to the downside. Right now, the risk to reward ratio is still stacked to the upside, so therefore you want to take long trades when you get close to here, and then have a very tight stop loss below it so that you can play the upside. That's how you're going to control your risk in this situation. If you're going to play the CPI number tomorrow, then wait for that rally, right? And then bang on two puts for the downside tomorrow. Obviously, that's still going to be somewhat gambling because you don't know what the news is going to be, right? From my perspective, I'm projecting it doesn't really matter what the CPI news is. I think that we go down anyway. That's just the way I look at it. It's very difficult for the CPI numbers to help the market at this point. Okay, so just to make it very clear on what I'm saying, today's risk to reward ratio favors the upside for an intraday trade. You want to wait for a confirmation with the squeeze that has been very notoriously happening intraday, like this, for example, and this, for example, and this, for example, right? All of these squeezes have been happening in the past couple of days, and you want to take advantage of that similar looking squeeze once we get down to the 35.90 or 35.80 level. Okay, if we don't get down there, then wait till we get down there. Don't go take long positions until and unless you have confirmation, right? Second, once you do get there, then you can take that bounce position only if you see that momentum and volume come into the market. Not adding on to the fact that your long positions should be very, very careful in terms of your strike selection. Why? Because look at the VIX. We are at 34. That means all options are going to be priced at an elevated level. You have to be extremely careful with how you price the strikes of your options, especially in a market like this. Because if you get the strike price wrong, you're likely not to make money or make not as much money as you thought you would make. Okay? So if you're going to go for some call options and you're going to play the bounce here, make sure that you don't choose the extreme end. Like let's say your target is 36.20 on SPX, then you don't play the 36.20 strike. You want time for both delta and gamma to accelerate. So your choice of playing options should be a mid strike. You should go for something like 3600, for example. Okay. All right. So I think you kind of understood the long intraday trade idea. Now, what about the short idea? The short idea only works if we break aggressively below 3570 and start rejecting 3570. Okay, that means we break below, we are rejecting this level. It's, you know, showing us clearly on the tape on level 2 data. We are seeing sellers bombing the tape, right? There's abundant amount of liquidity sloshing around, volume is high. Then yes, it makes sense. Okay, by the way, I put a poll up on what you think is coming up for the CPI number. Are we gonna get a hot CPI number or a cold salami CPI number? I would really appreciate it if you voted. Also, if this is your first time attending this stream, welcome in. Hope you're having a good morning. Make sure you hit that subscribe button and like if you can, so that the stream can reach more people. I truly appreciate you guys taking out the time to be here. But remember, these streams are free for you guys for a reason, because we believe in free education. We believe in putting out good information for you guys, actionable information, instead of just kind of, you know, stuff that you can hear on the news or your other furus, which we aren't. Okay, great. So we've covered a lot of things here. Now, not to mention, VIX has that one options trader who's betting on a huge upside. So anything can happen here, right? We also have IWM trying to break through key support here. So watch IWM as well, because small caps and mid caps are a key thing to watch, because they'll also make a big difference in where this market goes eventually. Now let me look at some key tickers. Are there any tickers that you guys want me to go through today? If you do have any tickers that you want me to chart for you or anything like that, go ahead, put in the comments right now. Let me get to it. Market's about to open in exactly 1 minute. I'm going to close out some positions very briefly right when it does. So excuse me once it does. I will be just preoccupied for a second. But if you have tickers that you want me to break down, put it in the chat right now so that I can do it. And if I don't see any tickers, then I will end the stream after I'm done breaking down some key stocks. 2 stocks that I like and I'm watching: First Solar and Enphase Energy. Both of these bounced pretty strongly, and I'm looking to see where they go after here. First Solar, I wanted... Sorry, that was TD Ameritrade. First Solar, I wanted to start rejecting these levels and start moving to the downside for downside confirmation. If we can get below 127, I want to take that short trade. If we start holding this level and start heading higher, then I want to start going for the upper trades, probably in like the 135 or 136 region. Enphase Energy, similar setup, but very different chart. This one had a big sell-off already and is now in a bear flag. Okay, give me a second here while I close out my trade on SPY. Sorry, give me a second here. Let me just get this out of the way. I have some profits here that I need to take. About 20% on SPY on the small account overnight. I took some trades here. Let's see what's going on with it right now. We are kind of moving down here. Let's see if we can get a little bit of a push down here, or are we going to get a bounce? I guess this will be a little bit of you guys live trading with me very briefly. I will get to the tickers, so just hang on a second here while I close out my trade. I'm just trying to get a good entry, a good exit right now. Just give me a second here. We have a nice little break here. Okay, let's have a look at the level 2 data real quick. Okay, so far so good. Let's see, buyers can continue to Now, for those of you that don't know how to read the tape, or if you are not well versed with what the tape is, this is level 2 data. This is the very detailed, fine detailed view of the S&P 500, or I'm looking at SPY here. Okay, so it does look like the buyers are starting to exhaust here a little bit. I will take profits right now. All right, here we go. That was about $400 or $500 in profits. I don't know why it shows up this way, but it's all good. We have about 7,000 in buying power today, so we'll be using that very conservatively this AM. I'll be waiting for some sell-offs to take some long positions, and then that will be my intraday day trade for SPX here. Okay. Great. Okay, let me do the really quickly. Let me do the tickers. Tesla and Microsoft. Okay, so Tesla. Now Tesla below 220 was very bearish. Next stop is definitely 208. The problem with Tesla is you need to wait for a little bit of a rebound here. So wait for this to kind of bounce a little bit. Oh, it's selling. This is actually a good spot to grab it for a scalp to the downside. But I'm not going to play Tesla personally, because I just I got burnt with it like 2 weeks ago, and on the small account I don't want to play such a risky stock. It does look like 208.51 is going to be a key level here, but the risk to reward ratio to the downside, not that great. Just going to say it right now. With Microsoft, let's see. Okay, so Microsoft is at a very key level here. It breaks below this, then we start to see 211 or 212. So that could be very disastrous for Microsoft. Pretty much at around 215 strike, or even 220 strike would be nice if it can break below here and start heading further down. Now, the fact that it is actually so sold off, I don't want to take the bearish trade on Microsoft. So this is the same thing. Same thing with Microsoft and Tesla. I don't want to take the downside trades here. I'll wait for the pullbacks. Wait for this market to reset a little bit, which it will. Trust me, it will, right? And then I'll play the downside. You don't need to be so freaked out that the market is selling off here and then, oh my God, I'm losing out on this opportunity. Relax. There is going to be a wave up after the wave down, okay? So rather than you getting trapped into a move that you don't understand, wait for the wave to complete, wait for the bounce, wait for to see the price action, what's going on, and then you play what you're thinking is going to be the move. Like, for example, I said, here's a good spot to take some long trades, right? This is where I want to go long on SPY, actually. So let me go look for a trade rate real quick. So it's SPY. I'm looking for more than likely 360 calls, but I won't take it until I get a confirmation here. So I'll hang on. I will hang on here with SPY. Once I get a confirmation, then I'll take 360 calls on SPY. Oh, we are actually getting a nice bounce here. So one more candle and then we'll know. Okay, back to the ticker breakdown. So let me see real quick. Amazon. Okay, let me do Amazon. That's gonna be the last one, and then I'll end the stream right here. Okay, so Amazon, yes. So this is a nasty one. Below 110.60, I am quite comfortable to go short Amazon, all the way to around 108, and then next stop would be around 102 or so, 103. If you want to play this trade and then don't touch it, I would say choose some expiries that are far out, like 2 to 3 weeks, and then play the 105 puts. I think Amazon doesn't have 102 puts, so it has 105 puts. So you got to go 105 puts and then let that thing ride. Simple as that. But remember, you got to wait for this thing to show you that it's indeed rejecting this level here, which is the 11250 level. So wait for it to reject a couple more times. That means on the 15-minute chart, wait for confirmation that it's rejecting. It needs to get lower than 110.50 here, and then you can take that bearish trade. All right, that's my 2 cents on this. Okay, great. Thank you for your questions. Thank you for your time here, guys. Once again, smash that like button before you leave if this stream helped you out. Thank you for taking the time out, and I'll see you guys on the flip side. Bye-bye.